We generally swing trade overnight. However, we just had a long holiday weekend. So I thought I would compare Microsoft, IWM, and Tesla to see if any one of them made any money. So we buy at the end of the trading day, that would be the Friday, and we sold the next Tuesday morning. So that's a long time for a lot to happen. And our expiration was only 7 days out. So that means theta could have hit us hard in each one of those three. So how did they do? As we know, volatility plays an important role in our overnight swing trades. The IV, implied volatility, of IWM is around 17, 18. And for Microsoft, it's around 18 or 19. And for Tesla, it's in the mid-40s. That leads us to believe that on average, Tesla is going to make the bigger move. So quite possibly that would be our best opportunity to make the most money. So at the end of the trading day, our indicator at SpyTomorrow.com said up. And so I'm going to track 4 different types of SPY-T trades over the 3 different stocks. And they are, first of all, directional, meaning just buying a call. And then there's the SPY-TA, where you buy 2 calls to 1 put because the indicator said up. And because the indicator is up, the SPY-TQ trade is going to be 3 calls and 1 put. And the SPY-TBQ trade is only buying 2 options, a call just in the money and a put 1/4 of the price. For the 3 of you out there who don't know, Tesla is known for their electric cars as well as some other products, and their CEO is the well-known Elon Musk. Microsoft is the software company founded by Bill Gates. And the IWM is an exchange-traded fund that mirrors the Russell 2000. So we buy those SPY-T trades and we see what happens Tuesday morning. And Tuesday morning arrives and our indicator was correct. The market started up a little flat. The SPY was only up about 0.1%, but it all continued to go up throughout the day. So these results are based off of selling right after the market opens, and our winner did pretty well. So I also compared to what would have happened if I sold it at noon, because the market did keep going up. I'll also show you what would have happened if our indicator had said down and we were pointed down during this up day. First, let's talk about Microsoft. Our expiration was 7 days out, but it only opened up 0.12, similar to what the SPY opened up. And sold when the market opened, well, we would have lost 3%, and that mostly has to do with theta, the time decay over the weekend. And it didn't get much better from there. We bought our SPY-TA for $1,485, and we sold it for $1,395 for a minus 606% loss. Our SPY-TQ was about the same. It would have cost nearly $2,000 at $1,985, and we would have sold it at $1,880 for a loss of 5.29%. And our SPY-TBQ, that was worse. We would have bought it at $654 and sold it at $607 for a 7.19% loss. So obviously for Microsoft, time decay theta really hit us, as well as just not having enough of a move to make a difference, especially over the long holiday weekend. Now let's talk about IWM, the Russell 2000, where we caught the sale when it was up 0.38%. Here we would have bought the call at $251 and sold it that Tuesday morning at $292 for a 16.3% gain. So if you bought 4 of those calls for about $1,000, you would have made about $160. For the more conservative SPY-TA trade, you would have bought 2 calls and 1 put for a total of $763. And you would have sold it for a little profit at $776 for a gain of 1.70%. The SPY-TQ, being a little more aggressive, was $1,014, and you would have sold that at $1068 for a 5.33% gain. The SPY-TBQ would have cost you $322, and you would have sold it at $335 for a 4.04% gain. Well, Tesla did what was expected, and it had a much bigger gain. But we need that bigger gain because of that higher IV. And it opened up 0.98%. It actually went higher at noon. It was 1.78%. which I'll show you more about in a few moments. So Tesla, 7 days to expiration. A single call would have cost $530, and we would have sold it for $625 for a 17.92% gain, which is just a little bit better than the IWM, but also has a lower IV. What about our friend the SPY TA trade? Well, you would have bought your Tesla at $15.45 and sold it at $16.10 for a gain of 4.21%. Our SPY TQ trade would have cost $2,075, but we would have sold it at $22.35 for a 7.71% gain, which is about 2.5% better than the IWM. The SPY TBQ would have cost $678, and you would have sold it at $722 for a gain of 6.49%. Not too bad, but the market kept going up, and by noon it was at 1.78%. So how would we have done if we had that patience? Again, we would have bought it at the same price. The call would have cost $530, and we would have sold it for $690, which would have been a 30.19% gain, which is almost double the sale we had at the open of the market. However, interestingly enough, the SPY TA trade didn't do as well. $15.45 is what we bought it for, but we would have sold it for $1 less at $16.09. Meaning we only made 4.14%. However, we do a little bit better again in the SPY TQ, which is more aggressive, buying at $2,075 and selling at $22.99 for a 10.8% gain. In our SPY TBQ at $678, which means we bought a call just in the money and a put at a quarter of the price, was sold for $735 for an 8.41% gain, which is about 2% better than the market open sale. Sticking with our Tesla trade, but flipping things around, going with our market open sale. However, for some strange reason, let's say our indicator pointed down over the long holiday weekend. What would have been the result? Let's say we bought that put at $620 and sold it at market open for $470. Well, that means we would have lost 24.19%. So for our SPY TA trade, that Tuesday morning, we would have sold the 255 put at $470 times 2 and that call at $780 for a sale of $1720. Divide that by 1900, which means our loss would be 9.95%. The SPY TQ trade would be the 620 times 3 plus that 660 for a total of $2520. Our sale that Tuesday morning would have been $21.90. The SPY TQ being more aggressive, we would expect to lose a little bit more, and we did, minus 13%. Lastly, the SPY TB trade, we would have bought the 620 and the 310, which is half the price, for a total of $930. We would have sold the put at $470 and that call at $380 for a total of $850, which leaves us with a 6.8% loss. Fortunately, our indicator was correct. However, Microsoft didn't have very much of a move, so it still lost money. Probably the same for the SPY, which opened up about the same. As you can see, those puts do put a drag on the profits, but they also protect us in case our indicator is wrong. Hey, if you have some overnight trade ideas that you want me to review, let me know in the comments below. I'll see you in the next video.